BlackRock asset managers are saying crypto is better than they ever expected. We will talk about Ethereum, we will talk about the crypto world and how this will impact Bitmine to go one day to $1,000.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video. If you don't know who I am, my name is Danny and I'm looking for stocks that can go up 10, 20, 30, 50, 60, 100x from where they went. And I invested very early in Tesla at 17 and it dropped to 6. Would you hold, would you sell, or you would average down like me with my life savings? So the rest is history. My subscribers bought houses and apartments in the US and we are thinking like, this is a very good return of investment to be subscribed to both of my channels. And also make sure to check out the one product that we created by our own. We never advertise anything else. xnDayTrading.com. If you want us to trade for you all automatically with our software on the US stock market, with that software, we want to achieve between like 8 to 15% growth every month. So if you start with $10,000, you should be somewhere around like, I would say $58,000. So if this is something for you, we only trading all hands off for you, totally automatically. Check out xnDayTrading.com. Now, I saw an interview that was very, very important. So that was by an asset manager of BlackRock. And as you know, BlackRock turned over the last couple of years pro-crypto. And obviously, this is very good for Bitmine as well. Bitmine is the treasury company out there that is going full trust on the next big thing after Bitcoin, which is Ethereum, right? Ethereum has so much more potential in terms of infrastructure, because if digital gold and something like a, asset value store Bitcoin is, and it's like the S&P 500, then Ethereum could be like the NASDAQ of crypto. And I think with that said, you always have to be open-minded if you see like this kind of big guys and big companies. One of the biggest financial company in the world, BlackRock, is talking about crypto. You read between the lines and then you can apply things on Ethereum as well. So let's have a look what he actually says.
So IBIT is clearly the big winner in the Bitcoin ETF race, on track for $100 billion in assets under management. And we have seen some outflows across the board over the past couple of days. Negative flows really hitting every Bitcoin ETF at the moment. What do you think is driving that? And is this a broader risk-off move or something more specific to crypto?
Yeah, well, I think we're still seeing the after effects of that October 10th flash crash in crypto markets. And, that was a really interesting episode. I think it shone a light on, some of the potentially more concerning aspects of current trading activity in this space. You've got a tiny percentage of the overall market cap of crypto and Bitcoin specifically. It's about 2% of the market cap of crypto in leveraged futures, and yet they're somewhere like 70% of trading volume with a lot of leverage, right? And so this tiny portion of the market can have a really disproportionate effect on price moves and volatility. That's what we saw in that October 10th flash crash. Obviously, major corrections across the board. Some cases, 50% intraday corrections in smaller crypto assets. Even Bitcoin was down 14% at one point on the day, and so that definitely, has a bit of a chilling effect for at least a couple weeks after something like that happens. And I think that's kind of the overhang that we're seeing.
Now, the pitch of Bitcoin ETFs is diversification without the friction of a crypto exchange or wallet setup. But is it really functioning as a digital gold replacement or something else entirely, especially since gold was hitting record highs while Bitcoin sold off?
Yeah, well, gold, of course, has come back a fair bit too in the last week or so after that record high. And what we see oftentimes is that when you zoom out, they tend to move in sort of medium long-term cycles together because they have a lot of the same drivers. And then within an even short-term period, sometimes one is rallying and the other is sort of flat, and vice versa. So that's kind of what we've seen here. But it goes back to, there's kind of two levels in this market. There's a top layer, which is very sort of short-term, speculative, often trading with leverage, that does treat this as sort of a levered NASDAQ almost asset, even though that doesn't make much fundamental sense, and that creates the volatility. And then you have this much larger lower layer, which is more sort of long-term institutional buy and hold, wealth advisory type investors, and they tend to ultimately accumulate on those dips in the aftermath of some of these volatility-driven sell-offs.
Now let's talk about that path to 100 billion. IBIT has dominated the space, overtaking GBTC despite its head start. Why do you think IBIT has resonated so much more with investors, particularly institutions?
Yeah, it's been quite amazing to see. Frankly, obviously we had high expectations for this, but not to the full extent of what we've seen. And what's happened is IBIT is overwhelmingly resonating with investors of all types in terms of a preferred Bitcoin exposure vehicle. Of course, there's lots who do and will continue to hold directly, and that's great and healthy to have lots of options in the market. But for institutions, it's made this a very turnkey, accessible, convenient way of holding it through trusted providers, not having to worry about operationalizing custody for financial advisors. It's a way of helping their clients consolidate assets onto their platform, be able to do things like borrow against it, do tax and estate planning with it. And even for lots of retail investors, they're finding it just to be a convenient, low-cost, preferable alternative.
What kinds of conversations are you having right now with institutions about allocating to Bitcoin ETFs? And are these mostly hedge funds, pensions, or RIAs dipping in for the first time?
Yeah, well, the biggest conversation gets back to what you alluded to at the start, which is trying to understand the risk and return drivers of this. Because when you look at it fundamentally as a global, scarce, emerging monetary instrument that looks a lot like digital gold to many people, and that is detached from the risk factors that affect any one country or their economy, monetary, political, fiscal situation, et cetera, that looks like a diversifier and a hedge on a fundamental level. But then you see this noise in terms of short-term trading episodes where people talk about risk on. That's a bit of a dubious concept to begin with. But especially so when you try to apply it to Bitcoin, because Bitcoin clearly is a risky asset on a standalone basis, but in a portfolio and with very different return drivers, it can play that important diversifying role. So you see these episodes where you have the leveraged perpetual futures kind of create outsized volatility relative to what they really are as a percentage of the market, and that gives institutional investors pause. And they said, well, we kind of get the thesis, but we really need to understand where do we think long-term correlation is headed, and is it actually going to behave the way we think it fundamentally should. And our view at BlackRock is over the medium and long term that it will, but certainly institutional investors are paying a lot of attention to some of that trading behavior.
Now, your ETF can be used as collateral. JP Morgan announced that it would start accepting IBIT earlier this year. Is that part of your long-term vision for how these funds integrate into traditional finance?
Well, it's actually amazing what you can do with the ETF in this category that has appealed to a lot of these large Bitcoin holders that have wanted to move some of their exposure from Bitcoin into IBIT, and certainly being able to borrow against it is one reason for that. So JP Morgan was out in front with that. Now there are a number of private banks evaluating being able to offer that. And then you've got, as I mentioned earlier, tax and estate planning becomes a lot easier. You can do certain things with options in terms of hedging, income generation, other ways you can sort of create tax efficiencies through an advisor with the ETF. And so we're just really scratching the surface, I think, of how people are thinking about that. And so it was exciting to be able to do the in-kind conversion starting in August when the SEC approved that.
Do you think that collateral use case could eventually extend beyond banks, for example, into derivatives, lending, or even tokenized finance?
I think so. I mean, ultimately, you have today lots of exciting things going on in the crypto space, and now people accessing those through the ETF, which is a traditional finance wrapper. And then you've got traditional finance assets that are being tokenized. People are accessing those in a digital asset wrapper. And ultimately, we see those two worlds converging in a way that kind of brings forward the best properties of both.
So as you can see, I think one of the most important things is like he says that, first of all, we are still in the aftermath of the flash crash and biggest liquidation in the crypto market. Okay, so that means that investors are still a little bit of patient. They want to see, okay, our gains are holding. What are the technicals look like? What market and what liquidity comes to the market? Markets need liquidity. And after such a crash, usually people are a little bit more, let's say, on the sidelines, right? Then we have the seasonality slowly should pick up. As you can see in the background, helicopters are flying here in Dubai already. You could have your own helicopter as well at some point. I read like the other day, like a tweet by a guy who turned like 1 million into $54 million just by buying the right stocks. Okay, so you can see here, everything is possible. You just have to be, grounded and focus on very high quality stocks. And I believe Bitmine is one of those, right? So let's go back to the interview. So he always said that the inflow of money into their biggest ETF, the IBIT, is actually very, very surprisingly well. Okay, they are now close to $100 billion on assets under management. So I think this is something very important to see, that something so new got so much attention. And I think the next big thing is the Ethereum ETF. It's not by BlackRock, but it's called so ETHA. Okay, this is the ticker. And, there's about like $15.5 billion in assets. So, 15% of what it is in BlackRock, Bitcoin ETF. So I think that this is something very important, because once you have this mass adoption for the finance world, and then comes tokenization of everything, which you mentioned as well, you have like a perfect outlook for Ethereum to go to 8,000, 10,000, 12,000, 15,000, 20,000 and much more. I think that Ethereum and 25,000 wouldn't be something possible over the next couple of 1 or 2 years. And then, Bitcoin obviously, absolutely exploding by then. Okay, so if you like it, make sure to subscribe and follow me everywhere on YouTube as well as on X. And also make sure to follow me tomorrow for a brand new video here on this channel. With that said, the grass is greener always on the other side.